Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. I got Greg Machinery, Pete Peterson on to talk about what's happening in the world of auctions. Greg, how you doing today?
I'm doing well, Casey. How about you?
Doing good, man. Doing real good. Well, it's that time of the year. We got Thanksgiving is next week already. Hard to believe we're that far away, that far into the year already. But typically this year is this time of the year is you see, this week's fairly busy. Next week's kind of whatever, but doesn't stop the auction market from rolling along. As you're looking at the auction market now, Greg, anything jumping out at you that shows some more stability that we've been talking about?
Yeah, I think we're seeing those signs have continued here through the last week, Casey. I know last Tuesday our friends at Merit Auctions, Zach and the Heiner and the team down there, had their dealer inventory reduction auction from a number of dealers around the country. Of course, Merit's out of their yard there in Fort Madison, Iowa. But as I looked at the prices, a couple things popped out to me. One, they had a pair of John Deere 9RX 640s, both 23 and a 22. The 23 model had 845 hours, went for 5075. I thought that was pretty good to get up over 5 with almost 900 hours on it. And the 22 model had 1400 hours and went for 394. So now if you look at 9RX 640s so far this year total, the average auction price is now with those two is coming in at 473, just over 473,000. Mm-hmm. Which it's only down 3.1% from last year, which was like 288 or 488 and a quarter. So dropping 3% on basically the largest horsepower track model that Deere has there, I think is, that shows the stability, because 2 years ago or in 24, the average auction price dropped 18.2%, went from 596.8 in 23. Fell down to 488 and a quarter last year. So huge drop. We saw that across the board. And then this year, only a 3% drop. Also on the sale last Tuesday, exact same trend on the John Deere 8R410s. You had two of them. Had a 24 model, 646 hours, went for 340. Another 24 model, higher hours, 613 hours, went for 333. And if you do the math, and this is all, you can check this out, folks, machinerypete.com. It's all for free. You can look at, punch up any model, and then up in the corner it says average auction price. So on an 8R410 this year, it's $336,034. And again, same trend. That's only down 3.9% this year. Last year, the average auction price 8R410 was $349,600 roughly. And again, the previous year they fell 11%. From 23 to 24. This year, only 3.9%. Now, what's driving that, we talked about this last week, but the number of 8R410s sold at auction this year is down 70.9% versus last year. The number of 9RX 640s sold at auction this year versus last year, down 67.5%. So just so many less on the auction market. The dollars are solidifying and the prices are holding.
Yeah. So I've been thinking about this I had a conversation, a good friend of mine the other day talking about this. I'd love your feedback on this, kind of what you're thinking. But if you look at, so if whether you're talking about a John Deere 9R 640, 9RX 640, whatever it might be, whether you're talking about a Steiger 620 or something like that, we were talking about how does that market fall into the place, considering now that you've got, because that used to be the top of the pyramid, right, as far as horsepower goes. Now you start looking at like the 715 Steigers. You start looking at like the 735 Deere and the 830 Deere, and how those start playing with us. Now you got like another echelon up. That kind of puts them in a weird spot, right? Because the argument for a lot of those things were, if I wanted to pull a 90-foot planter, 120-foot planter, something like that, the horsepower wasn't quite there yet to really get that to go 10 miles an hour. Now you have that now, right? You start looking at how those start to come into play. I'm kind of looking at this a little bit as, down the road, right? Does the 600 and 620 horsepower tractor, do you start seeing that fall into tweener land where it doesn't quite have a home anymore? That, if you're going to get to 640, do you go ahead and jump up to the 715 or 735, right? If you, or do you fall back to right around, a 590 to 550, something like that, and then reallocate those horsepower needs to something different? It's a weird world that we live in, and I've been thinking about that for a while now, and just not really had a conversation with anybody about it. But it feels like maybe we're seeing kind of some stuff you're talking about a little bit here. Is, do we start seeing some degrading of the value of those machines just because now it's like, what do I do with my hands type of thing?
Yeah, that's a great question, Casey. I fall back, I guess, on the number side, because I've been doing it for 36 years, but it's sort of, the numbers sort of tell us. But I think that sentiment of maybe if it's a tweener, I think we begin to see it. It becomes very stark. Like you could say on the 9RX 640s, for example, they're 2 years ago, at 596.8, and they've fallen down to, 473 in 2 years, pretty good drop. So, farmers will vote, they'll vote. And if they're moving up over 700 on the latest models, I guess part of me wonders if they are a tweener, and the hard cash end of it starts to reflect that, like they're sliding more. Does that open them up to people who wouldn't otherwise maybe look at that? He's just buying straight horsepower. You're like, well,
Yep.
if I can get a 620 or a 9RX 640 I wasn't planning on needing that much horsepower, but if they've dropped enough. So I've watched that play out over 36 years with those, as we've grown. I think, you saw it on the dealer side over the decades where jumps would maybe take a little bit of the buying heat off of the previous model or size. So yeah, it's fascinating stuff to track, no doubt. And again, to me, the way to measure it is just what a guy's write checks for when one shows up for sale at auction.
Yep.
And dealers, if they start piling up on dealer lots, we can start measuring that end of it. Like, geez, there's other models are a little tighter, but this particular horsepower range is getting a little heavy on the dealer lot. That'd be another way to measure it.
Yep. Because I always thought, when I go back and think about this a little bit, I always thought about it from when the 9RX was introduced, and you look at the deer line. So you had a 9R, a wheel tractor, 9R wheel. You had a 9RT track tractor, two-track tractor, and then you had the 4-track 9RX. And when that got introduced, I was like, well, man, they just completely, all they've really done here is they've isolated the 2-track machine. And I personally thought the 2-track machine was going to have way more traction than it did, just because of, man, I would love to have this, but it's, at the time, I think it was, I don't remember, it was $100,000 more, something like that, between the wheel tractor and the RX. There was about $100,000 in there. Mm-hmm. I thought, oh, well, this just opens the door up. Then I'd like to have the 4-track scenario, but I'm not going to spend that extra $100,000. I'm going to get the 2-track machine. That's really what I thought. We were going to see a boom in 2-track machines. I mean, I was way wrong. The 2-track side of it actually shrank, but very niched, right? If you go back, if you look at the people that are driving 2-track machines, they're willing to pay for those machines. Whereas the 4-track side of it was really kind of took off and ran. That's where I kind of see this now. The bonus to this is when you start looking at this, how a 4-track machine fits into that mix, is that there's not a 2-track option once you get past that 620 or 640 range, right? There's not a 2-track option, so you only have a 4-track option. That's kind of where I'm thinking about it, from a little bit of there's no inline competition, right? There's no configuration competition. It's his true horsepower range. You bring up a good point though when you start looking at, well, now I can get that 640 or I can get that 620, and it makes a little more sense because they're not making grain carts any smaller. They keep every year. No. It seemed like they add a 500 bushels to every grain cart every year, when it feels like when they come out there. Mm-hmm. So you start looking at some of these grain cart situations. It makes a lot of sense to look at if you can get the horsepower and the weight and stability and stuff like that come along with a four-wheel drive, it makes some sense to start going down that path of maybe I take out a couple of my higher horsepower railcraft tractors. I would use those for one of these bigger horsepower four-wheel drives. It's kind of point towards that.
Yeah, and again, it's what does it cost new, and
Right.
then how does it translate into the used market at, say, the 2-year-old level, like we were just talking about with some of these examples, hard cash. What about 5 years old? What about 8
Right.
years old, 12 years old? So
Yep.
it's all connected, and sometimes I see, I guess I call them, well, it would be trends down the chain. So,
Yeah.
for example, it'll be a jump from what we were just talking about, but like 2-wheel drive models from the 90s and 2000s. Now, yes, they're 20, 30 years old now, but when we see them sell at auction and bring for whatever reason, the farm market has decided that 2-wheel drive models like a 7800 2-wheel drive 7810 or the Magnums or the New Holland, it does every color. A nice condition 2-year-old, 20 to 30-year-old tractor has gone up in value. Now, 15 years ago, when we look at the front wheel versus the 2-wheel, it was like, wow, big gap. Now, I mean, shoot, we just saw John Deere 7810 2-wheel go for $158,300,
Mm-hmm.
a low-houred one. So sometimes down the chain, buying demand or what they're used for, how they're used, they might, when they were an oddball, now all of a sudden they're desirable. It's interesting. Farm equipment keeps advancing, and the used stuff, gets plugged in, and again, the auction front tells us how people are feeling about these things, yay or nay. Like, that thing, nobody wants that, so price tanks, or it's like, holy cow, look at that. You see what that thing sold for? So
Yeah.
it's been fascinating for 3.5 decades tracking it.
Yeah, it's amazing how those trends swing. We talking about trends. I mean, I think the one thing that's like the easy example to point to when you look at trend lines is tillage, right? It feels like every 5 years we go through some new innovation in the way we till, and then what old becomes new again type of thing, and we keep falling back to various things. But so much stuff leading towards no till, minimal till, those kind of things. We start looking at vertical tillage and how that works, or you start looking at strip tillage, whatever it is that you're doing, right? Like all those different things fall into play and how they come into seedbed prep and those kind of stuff. Those trend lines fall in that stuff. That's why, when I talk to people about, when you're a used equipment guy, like these things that you should be paying attention to is not just what's going on in your area, but what's going on nationwide and how those things look. And I think from an auction perspective was the one thing that I wanted to pay close attention to, because you'd always see things start happening. Like, for example, it felt like everything kind of east moved west type of thing, or south moved north, or north moved south, depending on what was going on. And I would start talking to my buddies that were out there in, on the Atlantic coast someplace, and they'd be like, "Hey, what are you guys seeing happening out there? What's going on in your marketplace?" And they'd start talking to me about stuff. It's like, "Man, none of that stuff is. What are you talking about? You guys are on an island." Well, sure enough, about 45 days later, 90 days later, it's knocking on my door clear out here in the Panhandle of Nebraska. And it would just, after, get kicked in the teeth about 3 or 4 times, I'm a slow learner. You kind of learn to start listening to those things and start making those adjustments as you move along. As long as you've been doing this, Greg, when you start seeing these trend lines develop, what are some of the things that you do that changes the way you look at things as you watch these trend lines develop?
Well, I'm with you. Just what you described. I mean, it used to be new tools, whether they be tillage or planting or whatever, would be, popular in certain geographies. And you're right, they did kind of tend to move, either north to the south or east to west. But now I think everything is so much more condensed. The flow of information and stuff with, the internet, social media. I mean, we're all connected at the hip now. So when I look at tillage, I look at like high-speed discs. I remember, to me, I'm 36, been doing this 36 years. I remember writing a column for, Farm Magazine when I got an auction price in a case IH 496 disc that went for $17,500. And it was like, oh my God, that thing brought $17,500. And it put it out there. People were talking, it was just so eye-opening. And now you see, of course, we've been to auctions for the TV show where we see these Degelman Pro Tills or the Deere or the Kinsey just had an auction a week and a half ago with their mock tills that brought like 92 and 78 or something like that. It's just changed so much and so fast. But to me, it seems like the adoption of these advancements, they're instantaneous almost. Whereas before, it used to be that a little bit of that time lag you talked about, like almost like, well, those guys out in Pennsylvania, yeah, but I'm in Nebraska, I'm in Minnesota. And now, I suppose, you could just argue that producers don't have the luxury of not being plugged in. If something's better out there, it's like, oh, we need that. So on the dealer side, it's the same thing. It's like, hey, strip till wise, whatever. If that thing, vertical tillage, if you see these hot makes or models pop up and then they just take off, which, I guess you could argue is another form of a more efficient farm equipment space versus, 10, 20 years ago when when farmers were doing what they were doing.
Yeah. And you're right. It does feel like the adoption rate of new farming practices, new technology, those kind of things are more widely adopted a lot faster than they'd been in the past, And I remember when the Great Plains Turbo Till came out, and it was kind of on the leading edge of the whole, vertical tillage thing. I mean, it was almost 6 years after that came out before it really was like people were talking about
right
a vertical tillage piece, right? And now you start looking at technology that rolls out now. I mean, it's like it gets introduced in model year, 2025, for example, and by 26, a big swath of the people that are using it, right? And it's just
right.
that acceleration of technology and adoption of that is really changing the way people look at equipment and how they farm, those kind of things. It's really moving that needle.
Yeah, I've been saying this for a long time, but not to be self-serving to the farm audience, who I love, who supported me and our business all these years. But I really don't think the farming and agriculture gets enough credit for leaning in and leading change. I mean, you think about the farmer, however many acres you have, and you're willing to completely change your tillage practices. Like that is, people outside agriculture don't realize, I mean, how major of a business change you're talking about. So when I talk to people on Wall Street, or whatever about farm equipment trends or whatever, I always try to, like, hey, agriculture leads the way here. I mean, just think about GPS. I mean, wow, self-driving cars, big deal. I mean, we've been doing that in ag, I mean, it's unbelievable. So, yeah, God bless them. They're just looking for ways to get better. And, for example, right now, Agritechnica over, an example of a smaller, faster, more efficient equipment world. So you've got this farm show in Germany that most U.S. farmers have never been to. We're hoping someday to go do a special episode of the TV show over there. I think it'd be great fun. But people are watching, like, what equipment gets the awards. Like, oh, that horse joker or whatever it is, some different kind of planter. When I go to farm shows now, the thing I love most, Casey, is just watching where people congregate. Like, why are there 54 people huddled around that exhibit over there? What's going on over there? Because it's just farmers trying to be better. Right. And like I say, it's just so much faster than before.
Yep. And it's every little thing matters now. You know what I mean? Like it's
yeah, for sure.
I mean, everything does. How much moisture content you can preserve inside the soil and without disturbing it as much as possible.
Right.
Planting, like especially on the planter side. I mean, every time you go to a farm show, there's about 150 booths out there that sell some different variation of an opening disc. You know what I mean? Like there's all these little nuances that a tweak here and there, and it's like my old football coach used to say, you're better by 0.5% or 1% every day, and next thing you know, you've increased your ability to be your ability by 150 or 300% a year by doing that.
Okay, so on the topic of football there now, I know you're a Chiefs fan, and I'm a Vikings fan, so we're kind of licking our wounds a little bit. But that point you brought up, and you can speak to it as a college football player, but attention to detail is literally everything. It's in football, it's in farming, it's really in all of our lives, right? So I'm an old Vikings fan. So Bud Grant, he's basically a definition of what Minnesota is. Took Vikings to 4 Super Bowls. At the start of every game for the national anthem, Bud Grant they would practice this on the first day of practice in the summer, lining up on the sidelines for the national anthem, holding your helmet a certain way, standing at attention. And then you think about John Wooden, the famous UCLA basketball coach. The first day of practice, they taught the basketball players how to roll up your socks after they've been come out of the wash for practice. Mm-hmm. You talk, what can you control? Every single seemingly insignificant little detail that makes your operation efficient and on plane. And to me, watching great farm operations, that's absolutely what they do. And dealerships are the same way. There's great dealerships, and there's others that, are run differently, and that's fine. But being better is always better business-wise. Right. And it's to watch it in practice is a that's just business, but I've always been fascinated by it to see what are they doing, that farmer or that football team or that whatever. Hopefully machine repeat our business. What are we doing to be better? And you can never rest. You always have to. It's a moving curve. There's a word I'll throw out here. I think it's a friend of mine from Rochester. He was an engineer at IBM. I played golf with him for 30 years. Asymptotic, I think, is the word. And in an engineering sense, what that means is 2 points always getting closer together but never meeting. 2 lines. So it's basically when you're really good at what you do, you can take your foot off the gas and go, hey, we got it. But if you're a farmer, like you said, you can't do that. You have to always be getting better. And so I think equipment-wise, that's what I see playing out. And hats off to all the companies pushing the envelope.
Yep. Well, you think about it, the average bushel of corn since 1950 has increased by, last time I looked, it was 1.9 or 2 bushels an acre every year since 1950, right? And that goes back to that old adage, little things add up to big things, right? And when I first moved out here to the Panhandle, if you were hitting 185 bushel an acre corn, you were really doing something right? And that was 10 years ago. Today, if you're hitting 185 bushel of corn, you got to question why you're farming, right? I mean, it's just like one of those things in irrigated corn. So it's just one of those things. Like I hear guys, I only made 185 this year. I don't know what I did wrong. I'm like, 10 years ago, that was a banner year. But it just shows you how fast seed genetics and all these different things come along. And like you talked about, staying on top of those little things that come along. And I think that comes back to machine pricing. It's talking with guys when they come in and trade something, and of course it's my job to know what the value of a piece of equipment was when I was a used equipment guy, but they would come in and they would not know how much the market had shifted or how much the market had increased, for that matter, right? If things had changed and what that looked like. And again, paying attention to those little tiny things. And I go back to this, understanding what your plan looks like as you come into each year, right? If I'm going to upgrade my machine, what's that look like? What's the current market look like? When I first started doing this 20 years ago, it wasn't, you had to go to individual places to find all the information that you needed, right? I had to go to various auction sites to figure out what auction values were, go to retail play, all these different things. I mean, it took time to do all that. Mm-hmm. Well, today you can go to one place and get all the information that you need, right? You can get all the auction data you want from machinerepeat.com. You can go out and see what like machines are being asked for in the marketplace and have some kind of a deduction in there that, hey, I think my machine's probably worth this,
Right.
And that's the kind of thing when you're looking at it, the surprise people get when they see the trade difference pop up, right? Well, the trade difference, the reason why it's so shocking to them is not because, oh man, you're trying to steal my machine. It's oh man, I owe $300,000 and you're telling me it's only worth $250. I wasn't ready for that. And right. That's the shock and the awe that comes into that. And you can go through all the steps of showing why the 250 number is right, but it's still I'm upside down $50,000, right? And that's where that comes into. So I think I can't stress enough that when I talk to guys about looking at, I'm going to update my equipment. Well, why are you going to update your equipment? Number one. And two, what does that look like to do that? Right? Run some scenarios. Sit down with your dealer guy and have him run some scenarios with you. Like, here, if you were to trade all this stuff in, here's what it would look like, and run those scenarios through there, and then make the decision on what you're doing. But I think don't wait till you get to, okay, I'm ready to make a trade now. I'm ready to go trade my equipment, and to go do all that. Run some scenarios through what you're splashed against your business plan to see what that looks like. Because I mean,
100% agree. 100%. Yeah. In a way, it's like we talk about, we smile and do these football analogies, but you don't decide to be good one day.
Right.
You got to be, if you do your details all along. So when we were just talking about, last year, these 600 plus horse tractors or whatever, 8R410, same on the red, blue, the whole thing. When they dropped, average auction price dropped, 11 to 18 to 20%. If you lope along and wait until you need to do something, you've missed all these little ups and downs along the way, which, that's where the smart operators plug in and go, oh, perhaps now is an optimal time to do X. Whereas if you wait until, now I need to trade, then you might get hit in the head by a 2x4, like, oh my God, I don't like these data. Well, too bad. You missed your opportunity. So, and like you said, the information is in front of us now, but it's still on each of us to take information that you trust and use it and make good decisions. So it's easy to feel like you're just bombarded from every side now, but it really hasn't changed. It's all about knowing your operation, and like you said, think ahead and be proactive. Talk to your dealer, talk to your lender, and that's when you make the optimal decisions. And you don't make it used to be a mistake on the equipment side was what, 8, 10, 50, 25,000, maybe 50,000. Now it could be, you can't afford those mistakes. So
you're thinking you're lucky stars if it's only 50 grand now.
Exactly. Which it is what it is, right? We don't have to like it. That's just is what it is. So.
Yep, for sure. All right, Greg, good place to stop. Folks want to reach out to you, get more information about coming and speaking at an event or showing up at the auction. Best way to do that, go to machinerepeat.com.
Yep, just hit our little email or phone number there. This Thursday, I will be out in Benton, Iowa, down at a Younger Auction Company sale. So come join us there, folks. We've got a lot of stuff coming up. But yeah, reach out, give us a call. Love to come out to your event and just be there. It's fun to be around people and do these things. So great fun.
Right on. Well, Greg, appreciate you being on the podcast. We'll catch you again next week.
Sounds great, Casey. Have a good one.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a Deere.
All right, welcome back to Moving Iron Podcast. Marcus got Sean Hickett back on to talk about what's happening in the world of commodities. Sean, how you doing today?
Doing stupendous on a chilly 60-degree morning here in South Florida. So
frigid. I
got
can see
my long sleeve shirt on.
Yeah.
So
you got earmuffs and stuff to go along with that, or
I had to take them off because I didn't want to overplay that for the show. But
that's right.
I'll put them back on as soon as I'm done.
It's chilly, very chilly out there. You have to close the windows this time of the year. It's so
I'm going to be in Saskatoon here in early December when this Arctic blast comes the first that comes in that causes this historic cold December from North America. It looks like it could be minus 16 in Saskatoon when I'm there. So I'm getting geared up for fun times. So
well, make sure you tell them about 60-degree chilly weather in Florida while you're up there. Okay.
Yeah, they're probably going to throw eggs at me or something. We'll see.
Well, right on. Let's check that out. All right, Sean. A few things coming on. Obviously, you had a report come out last Friday, and I mean, it was they pretty much put out the same report they put out the last time they put a report out in September. Shocked the market. Saw a big sell-off on Friday, which you would expect to see that happen. Now we're seeing things rebound back. I guess your reaction to what you saw in that report.
I'm really not sure why anyone thought that the government would have any ability to put out a real report. I mean, we're closed for 40 days. We only open up Wednesday night. There's just no way for them to put an accurate report out. They had no way to calculate demand accurately, had no ability to really go through the data on harvest accurately, being shut down for 40 days. There's just no way for them to do it. So I'm not really sure why the market was anticipating they would actually make adjustments. We were warning that we had low expectations for this report, that we thought they would kick the can down the road and sort of, move the numbers around a little bit. But at the end of the day, corn and soybean ending stocks pretty much were the same as they were in September. And we're back to waiting for January, which is where we were before. And now markets are bouncing today, as they should. I mean, there's just nothing in that report that should have been bearish to the market other than some stupid idea that there was expectations that it'd be lower. Those expectations were pretty, quite frankly, they were never, in our opinion, a good view of this report. And hence, I still wonder what the politics were around why they felt the need to put out a report that they really couldn't accurately do the work. I just don't understand it. But the bad news is we had to go through that and get an unfortunate setback on Friday. The good news is it's now out of the way. We've traded it, and now we can get back onto the uptrending markets that we had prior to it, which we're starting to see this morning. So.
Yeah, not much you can do about it. And the real sickening thing about this was that we're really close to that 450 mark, right? And if you got that 450 mark, I think you would have seen some more upward stuff. But we'll get back there, work our way through it. And like you said, the January report's gonna change a lot.
I've always felt, and I continue to feel, that we're going to be looking at a high watermark again this year in that Jan-Feb timeframe after the January report, after we get more of the truth out. And we might get some South American weather to help us out a little bit too, create a little more upside, where our work is really giving us strong indications that center South Brazil and Argentina soybean areas, which represent about 40% of total South American soybean production, could see some really, really unfavorably dry weather. And that's a critical time for setting soybean yields in both those regions. So, that's enough of a region that we could get some funds to short cover, and on top of getting a bullish January report, that we might get some nice upside and a secondary opportunity to get some some cash sales on the books from the harvest that we just put away. So I'm optimistic going into the first quarter. After that, we'll just have to wait and see what China decides to do, and what kind of what kind of growing season it looks like we're going to have as we get into the spring and the summer. So,
right. Okay. All right. Let's jump over and talk a little bit about what's happening in the milk market. So if you look at milk right now, class 3 milk's trading around 16.5 to 16.75, depending on where it's at. That's rough. I mean, all commodities right now are rough except for the cattle side of stuff, but it's a really rough market on the milk side, Sean. So walk me through a little bit what's driving that and where you see that heading as we look towards the end of the year here.
Well, a year ago, we were suffering from avian flu, and we had reduced production because of the avian flu, and we had a nice shot up in milk prices to very good levels, not only here but also overseas. And then, of course, we've had very, very cheap feed prices, as you know. So typically, higher milk price, lower feed price means dairymen get a little more optimistic, and they start wanting to produce more milk. And so year over year, we're seeing 3 or 4% production growth in the U.S., and Europe is seeing about 3 to 4% production growth. In addition, because cattle prices have been so high for so long, that the dairymen have been breeding dairy cows to beef cows so that when they sell them, they can get a higher price and help offset or add additional income to their typical culling that they do every year of trying to move, And initially, that was creating extra culling and keeping the herd thinned out. But as the prices continued to go higher, they started to produce more of these animals and keep them on the farm longer than they normally would have been, to fatten them up more so that they had even more value when they brought them to the marketplace, which is now, and of course, until they sell them, they're producing milk. Mm-hmm. So now it's becoming a bearish factor because we're getting the herd growing, not because necessarily that we're growing dairy cows only. We're just growing these crosses, these beef crosses that are so profitable that we can have an unprofitable milk price right now at 16 and sell these beef cows, these dairy cows that have been bred to beef, and still walk away with the dairyman making somewhat of a return. If you start getting below 16, like class 4 prices, there's two prices. There's class 4, which is your butter fat, your butter, your dry powder. Then you have your class 3, which is your cheese, your dry whey type of thing. The class 4 market is actually down around 14, which is actually lower than even selling cows. Like, even if selling those cows at higher prices, you're now losing money in aggregate. So what we have to do is either we have to find new demand. We got to fire up the economy again going into the midterm elections. We got to, we got to pump money into the system, or we got to do a food box program, like we did a few years back, where the government was buying food to hand to people that couldn't afford to feed themselves. I don't know if that's going to happen again. I know it did happen when, not too long ago, and it was very successful at helping dairymen out. Maybe they're going to hand dairymen some assistance, some aid. We'll have to see, but it's going to be a little bit of a slog for a while, because now the cattle price is coming down, but it hasn't come down enough to offset the fact that we're still going to keep this dairy herd geared up for selling these beef cows at high prices. And so I think it's going to be a tough road through the first quarter. There'll be rallies from time to time, but I don't think there's much optimism, in my view, that we're going to see a demand driver come in to offset this until the second quarter, because there's no doubt, we know over and over again, as we go into the midterm elections, the administration in office has a compelling need to juice the economy, to juice the consumer, to help them out, to hand them $2,000 checks, whatever the case may be, so that they vote for them in their party in the midterm elections. And so I'm optimistic we will see that. I just don't think we're going to see it until the second quarter onward. And so my advice to the dairymen is you've had at least an ability to offset losses up to this point. Now you're at the point where that's going to be more difficult. You just have to look at any type of a rally that you see in class 3 or class 4 that you get in the fourth quarter and the first quarter. You have to be opportunistic to get those sales on the books, get some DRP on the books to get through this rough patch until we get some better demand side scenarios in the second quarter onward. So it's unfortunate. It's fortunate and unfortunate, but it's a problem that probably can stick with us for a little while, Casey. So
okay, all right. As you're looking at the cattle market right now, again, it's hard to see a lot of change in the marketplace until you start seeing the cattle herd start to come back, and there's no real signal of that we're seeing a big growth in the herd coming back. As you look at this, Sean, what are some of the things you're talking to your people about when it comes to cattle and some of that? Just, the swings in the marketplace are bigger now, but you might see a $10 or $15 swing in a couple of days, and now it swings back the other way. Some of these wild swings that you're seeing, very volatile marketplace right now. I guess as you look at this, what are some of the things that you're talking to your folks about?
What would the cattle price have topped out at if we didn't have a 50% tariff on imported Brazilian beef, if we didn't have screwworm preventing cattle from being exported to the United States? If those two things weren't in place, how high would cattle prices have gone? Meaning, that move, that parabolic move to the recent highs before we've had this mini crash, much of that, or majority of that, or all of that, was based upon those two factors, Casey. So and by the way, we still haven't reduced the Brazilian tariffs. Only the 10% is off the top from the actions taken last week by President Trump's administration. 40% remains in place, although they do claim they're working on a trade deal with Brazil that could be solidified here within the next week or two. But let's just assume that between here and the end of the year, the tariffs are gone. We're bringing all this beef in from Brazil. It does look like the politics are getting to a point where they're ready to start opening the border again. It looks to me like that's what's about to happen. So if we take those two things off, what would have been the top in the milk and the cattle price? I don't think we would have seen the cattle price get over $2 on live cattle. Like, I don't think we would have gotten over $2. So I think ultimately, even though you're correct, there's nothing we can do about the herd rebuilding. It's a slow moving train. It takes time. It's been long in coming. It's still slow in coming, but we can take that premium off of those two factors. And that premium, which we've already taken a little bit off very, very quickly, could still see another 20 or 30 cents coming off the live cattle side and maybe another 30 or 50 cents off the feeder cattle side before we get back to what actually would have been the price had those two extraneous factors not been part of the mix. And then we can sit there for an extended period of time. I think ultimately that's what's going to happen. We're going to move back down to where we would have been all along. And while that's a huge reduction from where we were, it's still a price that's going to work for the cattle guy, other than if they didn't make sales, if they weren't putting LRP on for feeder cattle like we've been suggesting, they've given a ton of money away by losing those two premiums, which I think we're in the process of losing. And we've been warning on your show for months that production needed to be taken because you can't predict when, but you knew for sure these two factors were going to come off it sooner or later. And it looks like they're starting to do that. And so I think we're in the process of taking it off and finding that more sustainable level based upon our herd slowly, arduously growing over the next couple of years and finally getting ourselves out of this tight cattle market. On top of it, I mean, the consumer, everywhere we look, it looks like the consumer is in a deep, deep pullback in their spending, in their budgets, we're in a deep consumer recession. I understand that technology and healthcare, which represent a large portion of the U.S. economy, are growing, and so we're seeing overall growth, but not in the consumer economy. And quite frankly, when it comes to beef demand, it's the consumer economy that goes out to steakhouses. It's the consumer economy that decides how much beef they're going to consume, how much pork they're going to consume. Beef is a very, very sensitive market, especially when the consumer gets into a psychological negative profile. And what's interesting is that even though technology is growing very rapidly, AI is starting to replace jobs through robots and automation. We're seeing Amazon, we're seeing Meta, we're seeing Apple, we're seeing Google. They're all laying off thousands and thousands and thousands of workers, despite the fact that they're growing and they have record profitability because AI is replacing jobs. So we're getting a jobless growth in the technology sector. We're not growing jobs. So even though those of the technology sector can make the overall U.S. economy not show recessionary numbers, it's not helping the consumer economy because the consumer says, shoot, I am worried about being replaced by a robot. And so that is not good at all for high-priced beef demand. It's not good for anything having to do with consumer demand. And even the dairy side, like we talked about dairy earlier, it's not good for dairy demand. So that's an ongoing thing that, the government's talking about handing $2,000 to everybody to get people more excited about spending again. Well, the Federal Reserve is talking about quantitative easing again to put more money back in the system. The Besson is talking about declaring a housing crisis so they can pump more money into the system. Fannie Mac and Freddie Mac, two of the organizations that offer backup for many of the loans that are given in mortgages, are expected to come into initial public offerings here in 2026 and raise a bunch of money to pump more money into the banking system to make more loans. Trump is talking about 50-year mortgages. All of this is trying to get the consumer to spend again while he's worried about his job. And consumer sentiment is as negative as it was during COVID and during the 08-09 financial crisis right now. That's how negative the sentiment is for consumer sentiment. It's not good for beef demand. So all that being said, I think the top is in. I mean, the top is in. And we're peeling off the Brazilian tariffs, and we're peeling off. And so, dairymen need to, cattlemen need to be very careful, not to, they may not want to sell right now. They may not want to protect right now because they feel they've given a significant amount of price back, and they may be waiting for a bounce, and I understand that. But prices are still extremely good right now. I think you have, two birds in the hand are better than four in the bush right now. I really feel that way, and I think the biggest mistake that cattlemen can be making is thinking, that they shouldn't be selling or protecting prices after this first knockdown And I think that's a mistake. I think they still need to protect if they haven't. If they listen to us and they have been protecting, protect more. These prices are 2 years from now. The current prices we've seen even after the mini crash you'll be dying to have those prices back, in my personal opinion. So,
okay. So all that being said, let's talk a little bit about the hog market. We see happening there. We saw the hog market was down week over week. As you look at some of the pricing there, as you're looking at that, what are your thoughts there?
Technically, we're trying to break out of a long-term wedge pattern, Casey. And if you look at enough markets and you see these long-term consolidation wedge patterns, sometimes when a market tries to break out but fails, which it did fail, then you get an immediate correction to the lower end of the wedge, which is exactly where we are now. Clearly, this consumer sentiment souring, as much as pork prices are much more attractive, much more affordable, it still impacts the psychology of the hog market when you're seeing consumer sentiment numbers being as bad as they are. I'm very optimistic we will still see better demand going into the holiday season, and that we'll see those prices rebound, and that we'll see some better price action. But I think in the short run, the negative economic forefront, it's just been too much of a headwind, and the hog market succumbed to it, Casey. And that's why we've kind of put ourselves back into the lower end of the trading wage of that wedge, building for an eventual breakout, I think, as we get to the latter part of the fourth quarter here. So, 2 steps forward, 1 step back, but I'm still optimistic. Higher prices are ahead, but sometimes it's all for one for all, and the entire livestock sector has gotten hit by this very, very negative consumer sentiment negativity we've seen in recent weeks.
Yep. Okay. All right, Sean, good place to stop. Folks want to reach out to you, get more information about what it is you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com, Twitter page at Ferdix11. We also have a LinkedIn page, and once in a while we put some stuff out about our forecast, our weather work, our statistics, cycles, and correlations to see if how we look at the world and agriculture might be of value to those that listen and watch your incredible show that we're blessed to be on. So,
Sean, I appreciate you being on every couple of weeks here and coming on top of what's happened. So, folks, reach out to Sean and check out what he's got. He's got great information there. So, Sean, we'll catch you again next time.
I look forward to it, Casey. Thanks so much.
All right. Thanks. Stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year,
Loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Aaron Fennell back on to talk about what's happening in the market. Aaron, how you doing today?
Terrific.
Outstanding. All right.
There was you know why I'm so terrific, buddy?
Why is that?
Well, there was a football game played in the Mile High City yesterday afternoon.
There was one.
And if God's not a Broncos fan, why are Sunset Orange?
I know that might be a stretch. That could be a stretch.
I don't think it's a stretch. I've literally seen bumper stickers, lots of bumper stickers that say that exact thing. So it's got to be somewhat factual.
I mean, a lot of things on bumper stickers. You know what I mean? A lot of stuff on bumper stickers. I don't know how factual they are, but there's a lot of stuff on bumper stickers. No, that was a good game. That was a good game. As a Chiefs fan and a Broncos fan, it was even as a Chiefs fan, I was pulling my hair out at how both teams could drive the field 80 yards, get to the red zone, and then have just one penalty after another and one just broken play after another when they
first and goal from the 37.
And then I'm just like, what the hell? And then it would be back and forth. And that's kind of what I figured the game would be like. I didn't think it was going to be a runaway by either one team, but it was every team had enough opportunities there to win the game by multiple touchdowns. It's just neither one of them took advantage of it to make it happen. So,
but the good news is there's store-wide discounts at every Walmart in Missouri this morning. So you're welcome, everybody. Really rolling back prices now.
Yeah, it's it'll be an interesting rest of the season to see how.
And I heard on the radio, John Dutton was there watching the game in the Walton Penner box.
Was that a fact?
Yeah. I was working on one of my turds in the shop listening to the game, and the guys on the radio were trying to get him into their booth. Didn't work, but they were trying.
I'm sure that didn't work out well for them.
They said he would, but he had to go because he had to get up to South Dakota and dance with wolves or something.
Something like that. Yeah. That's what we're calling it these
Real
days.
quick before he went to go be the mailman.
Yeah, exactly. And then, look out for the water world. You know what I mean? There you go. Got them all covered. All right, so here we are. It's almost this week before Thanksgiving. Typically the week before Thanksgiving, there's a little bit of activity, kind of a spike up. But the week of Thanksgiving, you typically see pretty
This is the week before Thanksgiving already?
It is.
It is.
It is. Yep.
Wow.
Yep. And typically this time, you see, you've got pretty much things are done. They've kind of got an idea where they're at, what they're doing. You start seeing some more spike up in activity during this week. Next week is always a hit or miss because how many people are actually working during that week? And when I say working, say air quotes here, working, in the equipment business, there might be there, but there's a lot of things going on.
Most people work the hardest on Friday.
That's right. Exactly right.
We have to be in line at 4.
But so as you're watching things roll in, you're starting to see this kind of give and take a little bit. You're starting to see some movement in the marketplace. You're starting to see a few things move out, even as how do I put this without being just over the top? A little, it's 1 minute, whatever. Over top's what I do. The report that the USDA put out on that supply and demand report, they rolled back yields by about just enough, which should have never had that report out in the first place because the government was closed, right? So I don't know where they got all this information from. Oh, that's right. They just used the same information they had back in September. Right? That's
made it up like before.
They're like, okay, I think we're going to have to roll this back just a little bit. So, I don't know. What do you say? Let's take off 0.2 of a point. Makes sense to me. Yeah. So you saw where the markets went. I mean, we were that close to 450 corn, front month 450 corn, that close right there. And they rolled it back to 421. All right. Good job, guys. For no reason, by the way. So anyway, enough of that. But
on Friday, I bought 600 bushels of corn, and it was 448.
Yep.
So
should have waited 24 hours.
I'd rather be buying $6 corn, but
yeah. Yep.
I got priorities.
But as you see this thing come through, and we've been talking about this, that we felt like there's going to be some spike up in prices here towards the end of the year.
Right.
And but every time that the price takes off running, here comes your friends from the USDA that take an axe out and chop your legs out from underneath you as fast as they can. And then it comes back because the market soon realizes that the USDA was categorically wrong.
Again. You know what? It's kind of like that. I think it was a credit card commercial a couple years ago, had that cash back, had that old fisherman with the dollar bill on the deal. Almost got it.
Yeah.
That's what it feels like all the time.
That's
like,
exactly right.
I hope right at the last. I think you used the Lucy and Charlie Brown kicking the football reference last week.
Yeah.
But I will say this. I'm a long way from any kind of Nostradamus crystal ball type fella, and a long ways. But the end of year buying has started, and every single one of it was every single conversation so far is, well, I knew I had to do it this year. I just wanted to wait till we got to the end and see what we had.
Yep.
So your year-end buying that isn't tax related, it's have to, has commenced so far.
Yep.
And it's been a healthy, I wouldn't say a healthy flow, but damn sure a healthy trickle.
Yeah. Yeah. And I think the thing about this is, even though the market's where it's at and things are where they're going, there comes a point in time when everyone's buying cycle is different, right?
Right.
What's worn out to you is just broken into me, right? And you start working your way through those things, you start to see that stuff happen. Well, unfortunately, the situation that we've been in here since late 22, early 23, probably. That's kind of when we kind of point to, hey, this is when the market starts slipping. Like July 22.
Middle of 23 for damn sure.
Yeah, like July of 22, and then you kind of had about everything was kind of slopping back and forth. Like, oh, I can't believe these guys are taking all this stuff to auction. And I was like, this is the greatest thing you could be doing right now, is taking this stuff to auction and working your way through that. And then you hit 23, and that's when you hit that wall, in my opinion. You started hitting the wall in 23, mid 23, and that's when the floodgates really started, because stuff's got to get back up. And then that's when you started this big, huge swath of stuff coming
right
through. The issue with that is, the biggest issue with upgrading equipment right now has nothing really to do with commodity prices, which it always has something to do with it, but it's like, that's not the driving factor right now. The driving factor is, even if we had $6 corn right now, $5.50 cash corn, $5.25 cash corn, we'd still be seeing a similar pattern that we're seeing right now because of because of the shock and awe of, like, I've told this story on here a million times, so I'll tell it 1,000,001 times. But I was talking to a guy one time when I worked at the dealership still, and I was like, "Hey, you're ready to trade this combine in?" And he was going through it, and it was I want to say it was a 15 or 16 model combine. I can't remember what it was. It was something like that. But the trade difference between the 1-year-old combine he wanted to buy and the 15 or 16 model combine that he had was more than what the machine cost when it was new.
Right.
So that's like a mind blowing moment for you. Like, there's like, holy crap, man! You mean to tell me, like, I got to buy this combine twice now that I'm trading? You know what I mean? So I think there's some
and
of
this
that.
time it's used.
That's right. And so I said that's some of that is the driving factor you see there, is just the sheer dollars associated with that. Right. And then, by the way, we're going to slap 6.5% on that. It's going to cost you $2,500 a day to have that sit out there in your farm, or $3,500 a day, or whatever the number is, to sit out there in your shed. That stuff's playing a factor into this. So it's slowing down, folks, the want to from the have to, right? And so now what you're looking like, and you've talked about this, you pointed this out last couple of weeks, that the have to part is really starting to outweigh the want to part.
Oh, for sure.
I'm having to do these things because X, right? Either I've spent the last dollars I'm going to spend on this particular machine. Now in my mind and in my operation, I've surpassed diminishing returns on this machine. So now I'm going to go back and look for a different one now. Or, you know what? I don't trust the fact that I'm going to be able to take this machine one more season before I have to spend a significant amount of money on it, type of thing. Like, those kind of things are starting to weigh in the factor. And just like what you talked about, folks that are coming into the table right now, coming to the table to buy something, they're having that conversation with you. Like, I want to see where I'm at. I wanted to see what my machine was like. I've kind of done my bro science inspection of this machine and kind of walked around it. And now I'm kind of seeing where I'm at now. That's what it feels like to me as the conversations I'm having with guys like you across the country.
Oh, for sure. We're in a market where want to and have to both don't exist, because want to is more than likely the answer to that is not, I want to trade this machine. It's, I want to be here tomorrow.
Yeah. Right.
I mean, that's out there on a lot of farms. Okay. Yeah. We want to be here tomorrow. So wire that together another year.
Yeah.
Until you can't wire it together, patch it together anymore within whatever that is within your realm. Right. I would rebuild a 40-20 10 times, but that's me. You get to the point where we have got to just punt on this thing, because enough is enough. When you get to that point, your want then becomes a half.
Right.
That's where we're at. We're in a market where there's all the wants in the world, but until the want becomes a have to, it doesn't happen. Now, that have to can be created in a sense from the dealer's angle. We got this money to do this program right now. That's it. Okay. That takes the want to a half because I have to take advantage of this program to get rid of this thing, to get something better and more dependable, and on and on and on. Right. Mm-hmm. So that's the, I guess in a nutshell, just to look at it a different angle than yours. That's why we're at where we're at. And those wants are becoming needs quickly.
Right. Yep. And I think
that guys aren't farming less. If you're doing business with a guy, and conversely, here's the other thing, Casey. We've been in enough downturn. There's enough stepping out, whether it's the 35-year-old retirement or the actual 75-year-old retirement, that guys are trading because they're growing.
Yep.
We had this, everything we had worked for just this. The neighbor came over. He's 70. He's quitting. We just took on 1,500 acres. We got to roll 3 machines because what we have ain't going to work,
Right.
So there's some of that going on too, which I guess I look at that as the bright spot of a downturn. A downturn always speeds up retirements, if you will.
Yep.
Because when it's down, it ain't there's no fun. It's
they fought their last battle. You know what I mean? They've kind of done the thing where like I've fought my last battle. I'm doing this.
Right. We wrote it up. We thought we'd hang on a little bit, and we've had enough fun.
Yep.
Time to go to Arizona.
Yeah, and especially too on that decision tree too is I'm only doing this for me at this point because there's there may be no one coming back, right? So that's
substantial amount of that in the world,
right? So I've been following. I always follow the marketplace, and I'm really big about what's gaps in the washout cycle time. I talk about that stuff all the time. And what that means.
Marketplace. So you've been like looking at microwaves and bicycles and
something like that. So the one thing about this, I think that is a bit of a trigger in the marketplace is where machines are falling into the bucket at, right? Like what bucket are you falling into? And I always tracked when I was a used equipment guy. I wanted to track not only how many combines, for example, did you have inside your inventory, but what made up that combine inventory, right? Like how many low hour, like 0 to 200 hour machines, 201 to 500, so on and so forth, right? Like what did that look like, and how did that functionality work inside of your inventory?
Real quick, the answer to that for you across the country is S780. That's it.
Model was part of it too. That was
Washington to Florida,
yeah.
California to New York, S780.
Yeah, that was always a part of it as well. But one side of that I always looked at was the number of machines inside of that marketplace. And what I always tried to do as well was try to narrow that down to where the problem's at and where's the chunks at that I need to move to get other people to come into the marketplace. Right. And so the thing that I looked at more than anything was typically the front side of that was always full, right? The 1-year-old machines. There was always a big, huge pile of those machines. That's not the case in today's like we talked about last week, right?
In today's exact market.
Yeah.
That dare I say might be a warm, I won't say hot, but that will be a warm market.
Well, what it's done is it's created a huge swing in the marketplace that I don't know that I've ever seen in my career doing this, right? Because even if you go back to 2008, coming out of the Great Recession, when things slowed down, it wasn't like it went to zero.
No,
right?
it was
like
halfway on the brake.
Oh, we're going to pull back 10 or 15%, right? Which is, oh my God, whoa, what are we doing here right now? Like, oh my God. If you were people still ordered new machines. They still came in. There was delays. There was a little bit of a delay in that 2010 time frame that kind of slowed things down. Everyone still got their tractors, right? And it wasn't like there was already a huge amount of machines on the marketplace during that time frame anyway, right? I mean, it wasn't because the previous year, for the previous 10 years, it had been very much coming out of the late 90s into the early 2000s wasn't amazing. The first 4 years of the early 2000s weren't amazing, right? You didn't really start seeing the movement in the marketplace until 2006, 2007, right? And those are the things that that drove the marketplace, and then you took off and ran from there, and then we had 12, 13, 14, and so on and so forth. So I'm just going to pick on combines because why not, right? That's what we do on the show, right? If you go look at number of combines in the marketplace right now, from 0 to 200 hour machines, all makes, all models, okay? There's 440 machines listed on the marketplace right now with 0 to 200 hour machines, right? 440, that's it. 201 to 500, it almost triples, right? To 8, well, it does triple, it almost quadruples, quadruple and a half. 1805 on the marketplace, right? 201 to 500. 501 to 750. These are engine hours, not separator hours, okay? 1382. 751 to 1000. 1164. 1001 to 1500. 1468. 501 to 2000. 1023. Okay? Now, you look at this and you're saying, like, well, so what, Casey? Look at that, a Challenger combine. I haven't seen one of those in a million years. They had a. So what's that tell you, right? So if you look at where things are at right now, like we talked about last week, 2026 order writing periods for all machinery is not going to be any different than really it was this past year, right? It's not going to be. It may be up a tick, but it's not going to be like, oh my God, we're up 30%. It's not like that at all, right?
No.
That means that you're going to have 2 years in there where you're going to have 2-year-old combines that are going to be under 500 machines, and 1-year-old combines coming in are going to be under 500 out, or 500 machines as a total, right? Ish, give or take. Which means that now you have sucked the top off of anything as far as any like, oh, I can go play the market now because there's not that many machines on the marketplace thing.
Right.
I can play that to my advantage, right?
Yep.
We're quickly entering into a seller's market and not a buyer's market, right? That's what I'm getting at. Now, don't get me wrong. There's still the backside funnel of that. There's still a lot of machines sitting out there. I just rambled them off. But those machines are going to have the possibility of seeing some of that movement based on what you see above it, right? So I'm not saying that all of a sudden combines are going to jump up 30% in value, used value. That's not what I'm saying at all. What I am saying is
ever.
What I am saying is that you start running into a supply thing, right? And what did we see last time when the supply thing happened? Huge supply thing happened.
Scarcity premium
started seeing that coming in. But what else did we see? You started seeing a lot of people selling stuff off their farm.
Yeah.
Right? Because you had what I wanted and it was where, you know what I mean? Now, again, I'm not saying that we're going to have a wholesale change in how used equipment gets sold and it's going to be sold off the farm. That's not at all what I'm saying. Because there's so many dynamics that go into that it's not as simple as I'm just going to go out and sell my $500,000 combine. And so there's a lot of moving parts involved in that, and that's trade-ins and interest rates, and there's just tons of stuff that make that movement happen. The point I'm making is that I think this sets the table moving forward that the amount of new equipment that gets sold every year is definitely going to be relegated to a certain percentage of the farming population, and that's simply because of the cost. And some of those guys that were 1-year buyer. Like every 3 years they come in and buy a new combine, and they buy a combine and a planter and a sprayer and a couple other things. They get a little bit of a discount because they're doing that. I just don't see that continuing to be something that can be physically continued through this particular cycle because of the price of equipment where it's at, right?
Right.
The used equipment side, that's going to be there. Now, I talked a little bit about this with Machinery Pete last week, but and you and I have tried to set this up several times with customers, but speccing out your used machine the way you want it, and what does that look like, right? There's every dealership for the most part, it's got 1 or 2 guys that really drive the amount of new sales that they do, that then drive the amount of used equipment they have come back into their marketplace.
Correct.
So if you're looking for a specific thing, I've never had a customer say to me, well, that's not my problem. I'm not doing that. I'm not going to do X, Y, and Z. Because at the end of the day, it does not change the way that their deal looks like. It might a little bit on a piece of paper that shows X, Y, and Z. But if I know that you're going to buy this machine when it comes back in, and you want it to have this specific one, I need to make sure it has duals instead of singles, for example, or whatever, right? And this guy's a big single guy or whatever. I'm going to make damn sure that there's at least an order. I'm going to order it with a set of duals that I'm going to set back here in the back until it comes in, and then we'll swap them out and all, whatever. We'll figure that out from there. Go work with a company like Axon or NST Tire or something like that, and work out a trade deal on a set of tires or something like that. We'll figure that out. As you're working your way through that, the conversations that you have with these customers, or the customer should be having with the dealer just as much as the dealer should be having with the customer, is that how do you want your machine to look? How often are you going to do this? And let's see if we can't set up some kind of a residual deal that keeps working our way through this so that you get the machine that you want. I get the machine off my lot. I don't have to worry about it sitting there. And the guy that's buying that the new one, he gets the best possible deal he can get. So everybody gets the best possible deal they can get, and it helps move the ball down the field.
Oh, yeah.
I think that is to me, I think that might be a little bit of a, and not that it's a new concept that's been around forever. Like I said, you and I have done that a million times with customers. But as you look at it down the roll there, if you went to talk to your dealer right now about, hey, I would love to have my combine set up this way, and I'm a buyer in 26, guess what they're going to do? They're going to figure out how to make sure that combine's sitting there, and you're going to do everything they can to make that happen.
Absolutely.
When you're working with customers right now, and you're doing those kind of things, how are you starting that? If you were to start that conversation with the customer, how would you do that? And then in your mind, how would you structure that deal?
Who am I having the conversation with first? The guy on how he wants his used?
Yeah, like, so you are the new guy will do whatever you ask him to, right? I mean, they're going to say, hey, I need 2 combines set up this way. Okay, cool, no problem. Now you're having that conversation with the first gen used buyer, and then you're also having a conversation with the second gen used buyer too, because you're going to try to kind of mash these together to make it work.
Right.
So how would you go about doing that? Like, what's the conversation you would have? What are some of the points you would be pointing at right now? Like, I'm the customer right now, and I'm coming to you and saying, hey, I want to have a combine that's got the biggest, baddest tailboard that I can get right now, and I want to be able to.
You want a Tri-Power S800?
You're right, and I want it to be able to. Out here where I live at, there's 40 mile an hour winds in April, and I want to make sure that I cast my residue to where that 40 mile an hour wind does not blow it all away in April. How do I go about that, Aaron? Can you help me with that? That'd be the easiest thing, right?
A plow.
Then
the dirt blows away, not the residue.
Yeah, that's right. Yeah.
No, I mean, right there, you have a customer come to you, and man, next year, hopefully, first of all, you have that relationship where you have this kind of communication with your customers that matter. All of your customers matter, but your 2080, we'll throw that out there. You just have the you should probably already know what he wants if you're doing your damn job, right?
Mm-hmm.
So I can be, in my brain, I would be like, oh man, here's the deal. If 21st Farms, if I they do that multi-unit deal. I can tweak their specs how I want them. Then I can get Seymour Farms, those two S7800s, set up tri-power just like they want him. He'll run 4-wheel drive. It makes him no difference. Because the beauty behind all that I think you're getting at, other than I didn't think you wanted to record a sales exercise, but I think what you're getting at there, those deals, the multi-unit deals, regardless of color, regardless of wear, almost every single one of those in the world is set up on X amount per hour.
Correct.
Okay.
Yep.
So whether that's a 1300 power shift Deere or a front suspension CVX 380 half track Magnum,
right?
It's X amount of dollars per hour per machine, whatever. So you take your manual fold chopper combine and make it a tri-power, your dollars per hour is obviously it's going to change because the price of the combine changed, but not enough. Typically not enough where it's going to cause an issue on the front side.
Well, some of that too, though.
And there's a discussion. You don't just change that guy's specs anyway. You have a discussion before. Once I hear, let me back up. Once I hear Seymour Farms wants 2 tri-power combines, then I go directly to 21st Farms and say, hey, since we do this on $1 per hour, I need to tweak a few of these specs on the combines, a couple of the small tractors, a couple of the big tractors, because I got somebody that wants them after you're done. Does that work? Yeah, let's see what it looks like. It makes me no difference. And then, okay, oh man, I don't know if we can do that. Okay, time out. Seymour Farms, I can get it done, but it's going to cost this instead of this. Okay, great. I think we can do that. Okay, 21st, we're good. Great, done. You just sold 4 combines, 2 new ones, 2 used ones, and you got the used secondary trades on the hook. Not sold, but on the hook. Right.
But I think the other side of that too is when you're talking to that customer on the new side, going through that, I'm not saying like it might change $1 or $2 an hour that it actually influences the difference, but a lot of those cases is that because you're taking out the
real quick on the dollars per hour scenario, you can still look at that as a traditional trade.
Mm-hmm.
Yeah, your dollars per hour went up, but in a roundabout way, you also got more for it because you didn't just pay more dollars per hour to wipe out the specs to get it priced the same as the old combine. That's also not how it works.
Right.
You are getting money back for that. It's just the fact that that exact line item does change because the top number changes.
Right. So that's what I was getting at. The point is that the dollar per hour that you're changing doesn't necessarily mean that I need $20 more an hour for this particular combine to go make it run. That's not what we're saying. No. What we're saying is more than likely that doesn't change at all. Typically, I mean, if it does change, it's a little bit. But the idea that you're going to take it for this dollars per hour, and then you have this much in it, and you're going to go back and sell it to another customer on the other side of that, from a dealership perspective, you've taken out a lot of risk that the dealership doesn't have to account for now during that trade process.
Right.
I don't have to sit back there and be like, okay, typical combine sits in the lot for 6 months, 9 months, a year, whatever it is before we sell it. I'm like, well, those 2 combines are gone. I don't have to worry about that. I'm gonna unassume that risk from selling that piece of equipment off of my lot now. And now you've done that, a bigger, broader thing. I think as I look at these kind of numbers right here, like I just talked about, it's going to get harder and harder for people to say. I mean, think about the 1-year-old combines right now. Not all those are 1-year-old combines. There's some 1-year-old combines in that 1805 bunch. But if you just look at just straight up, and I had that number not too long ago. What was it? That was tractors though. If you just look at just 1-year-old combines, Let's look at that real quick. How many 25 model combines are on there? And a lot of people are, well, Casey, it's not all. Everything's not. There's only not all the way through 2025 yet. There's stuff out there still. Those deals are cooked for 26 deliveries, right? So all those deals right now, I mean, what you're seeing on the marketplace right now, that stuff that's listed is 90% of the inventory that's going to be available right now.
For sure.
Few dealerships are like, I'm not going to advertise anything until it gets on my lot. Like few people do that. Like that's kind of been out the window for a while. So what you see on the marketplace right now is out there. So 2025 combines, all makes, all models. We've got, there are 28,000 altogether, in case you're wondering. There's 1,274 used combines, 2025 used combines on the market.
I'm surprised it's that many.
Yeah, me too. But that's not that many.
No,
when you're
I bet
thinking
26 is down from that.
Yeah, and when you think about, that's all the Deers, it's all the Case, it's all the New Hollands, it's all the
Lexions,
the language. It's all the language, you know. If you start looking about all that spectrum of machines, there's not that many. That's not that many to think about.
Right.
I think that continues to push that into a scenario where, you're looking at just an opportunity that's not going to drive up prices by any means. It's going to solidify prices, but it's going to give you, I think if you're looking for a used combine, you're going to need to be a little bit proactive in what you're thinking about doing. Like just showing up and looking at what's on the lot might not be as fruitful as you think it might be. Just because of selection, right? I mean, if you think about it, there's 1,274 combines. There's something like 2,600 dealership locations. 6,700 dealership locations in North America, right? That's from one store, independent guys, all the way through, the 100 plus store guys.
Right.
So that means if you take the number of, there's less than one, what'd that be? There'd be like one combine for every 4 locations, 2025 combines. So I mean, that just tells you how that number looks.
If that's all there was, that'd be a healthy market.
Right. Now there's 28,000 total combines on the marketplace right now.
Right.
Give or take 29 or 30,000, something like that. So you do the math on that, right? What's that give you? It gives you about 5 to 6 combines per location, right? Now, it'll be 4 to 5 combines per location. Now, that might seem a lot, but that's everything from a X9 1100 to all the way down to
a pull type number 12.
Well, okay.
That's the smallest I could think of.
Yeah, I mean, if you're in Amish country,
a McCormick corn binder,
right? So, I mean, what I'm saying is that it feels like there's a lot of stuff out there right now, but if you look at it from a per location perspective, it's not as bad. Now, if you drive by a dealership and Case, I drove by this dealership over here and there's 40 combines sitting on the lots right here. That's very much an opportunity. Yeah, sure there is, right? But where those get moved to and how things work is a whole other animal. And the point I'm making is that because of what we've done, because where pricing has gotten to, and what we've done as dealerships have done through kind of trimming down their inventories and those kind of things, man, I tell you what, there's not a lot of abundant supply as what the issue with the supply that's out there is the dollars associated with the supply, not the supply in standalone machines. That's
it's dollars, not numbers.
An amazing long way for me just to say one thing at the end that just says it's the dollars associated with supply, not the supply of actual machines. Wow. Okay. All right.
But it was a beautiful soliloquy to get there.
Your mindless rambling has made us all dumber.
You're awarded no points.
No
and
points.
May God have mercy on your soul.
Right
Business ethics.
Right on. All right, man. Probably a good place to stop. People want some of your High Plains wholesale stuff. What's the best place to do that?
You can catch High Plains Wholesale on Facebook and TikTok. You can see the same videos on my socials, just by my name, Aaron Fintel, on X, Twitter, and Facebook also. And I'm also on LinkedIn.
Right on.
And you can call me or text me, which most do, 308-760-1193.
Right on. Casey Seymour. You can find me Facebook, X, Instagram, I think TikTok, LinkedIn. I don't know. I'm all over the place. At Moving Iron Podcast or Moving Iron LLC, one of the two. You can see the audio version, or you can watch the audio version of this, because you can't do that because it's audio. You want to listen to it. Go to AgWeb, and you can see the podcast section there for all the Farm Journals podcasts. You can also watch the video version of this over on the YouTube channel, which is Farm Journals YouTube channel. Check it out there. You can see all the stuff that's there. I think I'll leave everybody with this. It's a dynamic time right now. A lot of things that are happening, a lot of moving parts that are happening right now. Having a plan about everything that you're doing on the farm is the most critical thing you could do right now, whether it's looking at machinery, whether you're looking at how you're marketing your grain, whatever that is. Whatever that plan looks like is one of the things that you need to have in place that helps you make that decision when it comes through, at least formulate that decision that's coming through. And the dynamics that are in equipment right now, there's whole good decisions to make if you want to go down that path, which is complete machine stuff. There's upgrade systems. There's all these different components that come into play. And it's not a one size fits all, right? If you are really thinking about moving up and upgrading your piece of equipment, what's best for your farm, what's best for your operation, what's best for your financial situation. There's more decisions to make now than I'm going to go buy one and trade one in. It's a bigger dynamic than that, and there's a lot of moving parts. So please think about what you're doing and call guys like Aaron, and they can walk you through all the decision making processes that are there. So Aaron, appreciate you being the podcast. We'll catch you again next week. So with that, Casey Seymour, thanks to Sean Hackett and Greg Machinery, Pete Peterson for being on this week's podcast. So thanks a lot. We'll catch you again next week. Let's go move some iron, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.